It is no secret that organizations in the crypto industry have often clashed with authorities, with Ripple's current lawsuit vs. the SEC being probably the most noteworthy example. However, the SEC is now suing even larger people in the crypto business. Binance and Coinbase, two crypto juggernauts, have become the latest to dispute with us authorities. Max Keiser, a famous Bitcoin supporter, has predicted the conclusion of the dispute between Ripple and the United States Securities and Exchange Commission, SEC. Keiser thinks Ripple will eventually lose the lawsuit, claiming that XRP has already been marked for death. Keiser recently remarked in a tweet that the ongoing case is not about the law, but rather about getting rid of XRP. He said that SEC Chair Gary Gensler had been tasked with bringing down XRP. Keiser went on to say that El Salvador's move to accept Bitcoin as legal cash was a huge step toward ignoring other cryptocurrencies that are considered unregistered securities. Keiser also addressed prominent corporations' ambitions to develop spot Bitcoin exchange, traded funds, ETFs. WisdomTree, a well-known ETF provider, has applied to the SEC for permission to create the WisdomTree Bitcoin Trust after BlackRock's identical application. The SEC's enforcement measures, according to Keiser, have paved the way for these bigger firms to join the Bitcoin industry while harming independent players and crypto exchanges. Keiser, known for his unwavering support for Bitcoin, has been an outspoken opponent of altcoins, notably XRP, which he has called a sheik-coin on many occasions. In the continuing case against Ripple, he has linked himself with the SEC's assertions that XRP is a security. Keiser often uses the SEC's enforcement activities against other cryptocurrencies to disparage the XRP community. Members of the XRP community have shown a willingness to refute Keiser's accusations in reaction to his statements. Notably, CryptoLaw creator John Deaton agreed with one of Keiser's allegations about the SEC. Deaton agreed that Gary Gensler, the SEC chair, is preserving incumbents and the existing quo while attempting to limit competition. Ripple stated on June 22 that its subsidiary Ripple Markets APAC PTLT has acquired IN, principal clearance from Singapore's central bank, the Monetary Authority of Singapore, MAS, for a major payments institution license. The company also announced on Twitter that it has expanded its presence in the Asia-Pacific area. Ripple CEO Brad Garlinghouse said that the MAS continues to lead in digital asset regulation, recognizing its value in business and retail. Garlinghouse will explain how investment and clear legislation may assist with digital asset innovation at a symposium in Switzerland on June 27 as part of Ripple's engagement with the MAS. Ripple's chief legal officer, Stu Alderoty, claims that nations building crypto regulatory frameworks turn to Singapore for developing a clear taxonomy and licensing framework. Ripple executives remain confident in their win before the U.S. Securities and Exchange Commission and reiterate that XRP is not a securities. With the ongoing legal action by the United States Securities and Exchange Commission, SEC, against Ripple Labs reaching a critical juncture with the recent public release of Hyman's speech, related documents, all eyes are now on Judge Analisa Torres for the much-anticipated summary judgment. Essentially, the Hyman papers revealed the SEC's preference for Ethereum over other cryptocurrencies. Hyman maintained that digital assets that were first sold as securities might become non-securities. However, he only recognized Ethereum as a non-security, whereas XRP investors are currently dealing with the Ripple litigation based on the same principle. Judge Torres made a decision in March 2023 on both sides' applications to exclude expert evidence. Since the March ruling, more than 100 days have elapsed, and the summary judgment is still waiting. This prolonged wait surpasses the typical time period Judge Torres has taken from Dalbert judgments in past instances, indicating that a summary judgment in the Ripple litigation is possible. Surprisingly, the U.S. Federal Reserve has announced that the FedNow service would begin operations in July 2023. This service will allow banking institutions throughout the United States to offer rapid payment services 24 hours a day, 365 days a year. Notably, 3 Ripple-partnered banks have been engaged for the July 1 launch: Finastra, Volante Technologies, and AC Worldwide. This information has sparked debate in the cryptocurrency industry over whether the final Ripple case judgment must be handed before the FedNow service is launched to guarantee complete legal compliance. The progression of these events shows a convergence of conditions that might possibly make July 1, 2023, a watershed moment in Ripple's legal struggle with the SEC. As the cryptocurrency industry observes, the importance of this day may go well beyond Ripple, altering the regulatory environment for other digital assets. According to newly disclosed court filings in the Ripple vs. SEC's lawsuit, Ripple is said to have paid 6 exchanges between $1 million and $5 million to list XRP. In light of these allegations, Ripple's chief technology officer, David Schwartz, has issued a response to provide some light on the situation. Schwartz elaborated in response to a conversation started by the anonymous self-proclaimed scam detective. Remember that in the newly published court filings, Exhibit 220 was highlighted by the crypto basic as evidence that there are reasonable reasons to assume that XRP does not satisfy the Howey test. If this came from the SEC itself, some supporters have said it would be game over for the agency. However, Mark Fagel, a former attorney for the SEC, has said unequivocally that the SEC did not author the paper. Scam Detective has recently tweeted about this as well. But he also claimed that a legal company drafted the agreement on behalf of Grayscale Investments. Scam Detective said that the legal firm's conclusion that XRP is not a security was supported, in part, by the fact that Ripple does not facilitate XRP trading on the secondary market. However, recent findings suggested that Ripple spent between $1 million and $5 million to 6 exchanges in 2017 to list XRP. Scam Detective determined that the Grayscale XRP Investment Trust dissolved in January 2020. Due to these charges. According to the accusations, Ripple has been after Coinbase for years to offer XRP. In answer, Schwartz provided some clarity on the situation's complexities. The assertions made are, he stressed, only allegations and the truth is far more nuanced. Schwartz provided an example to illustrate the processes that may underlie such claims. He elaborated that Ripple may initially choose not to pay a hefty price requested by an exchange in order to list XRP. The only way Ripple could utilize the exchange for auto purposes and force XRP's listing on the platform is if it subsequently discovers a chance to develop a worthwhile payment connection with that exchange, in which case it would pay for the integration fees. Instead of only listing XRP, this payment would help Ripple achieve its greater aim of increasing its on-demand liquidity (ODL) service. Schwartz made it clear that this is just conjecture. He stressed that litigants often make charges in the most negative light imaginable without really contradicting the truth. He warned against taking the charges at face value and emphasized the need for a balanced assessment. You may recall that claims appeared in the past suggesting that Ripple paid exchanges like Coinbase to list XRP. Notably, this month, Scam Detective questioned Schwartz how much Ripple paid Coinbase to include XRP, reviving long-standing suspicions first reported in a Bloomberg piece in 2018. The story of Coinbase listing XRP is the only story I most wish I could tell that I can't, Schwartz said at the time.